Chris, we covered a strong May in the markets. Where does that lead us in the month of June?
I mean, there are a few reasons to still be potentially optimistic. I mean, the first is the VIX, the volatility index, is, it ended May at 18.6, which is below its long run average of 19.5, right? Yep. So
after some really squirrely times back in April.
And I mean, that's consistent with past bull markets. It's also consistent with some optimism about where things are, like bond yields, like stocks, both U.S. and non-U.S., doing well year to date. That implies, hey, back to a bull market type of scenario. Secondly, if we look at the next chart, U.S. large cap tech has been outperforming since the start of the second quarter of 2025. In fact, it's responsible for 70% of the S&P's second quarter returns so far. That's a pretty important slice of the U.S. equity market, and obviously it has some decent momentum to this point in the year. Thirdly, I mean, demand for labor has been pretty good. We talked some about unemployment claims. I mean, assuming unemployment claims don't start to rise, that would help maintain consumer spending, keep corporate earnings growth in line with expectations. I mean, there's an old saying, markets climb a wall of worry, right? And we've had outsized uncertainty to this point in the year. So the performance of non-U.S. and U.S. stocks in May, it's certainly positive. Seems like a sign that maybe, investors have adapted to trade uncertainty.
Right.
And the fact that capital's going back into those Magnificent Seven stocks, I mean, it gives the impression the market's found its footing. So hopefully it continues to be good.